My name is Matthew Klinsky, and today I'm going to talk about key vendor relationships if you're thinking about starting a staffing firm. Over the past several weeks, we've seen a huge number of people leaving corporate staffing jobs, branch manager jobs, account manager jobs in staffing firms, and they're looking to start up their own business. And a lot of them are, nervous about, taking that first leap. But if you are ready for that first leap, I congratulate you because you're going to join hundreds of thousands of entrepreneurs who've started their own business. And staffing is a great business to be in, especially going into this third and fourth quarter of 2020. Today, I'm going to talk a little bit about the decisions you have to make regarding your back office operations and specifically which vendors you're going to need to think about in terms of cost analysis to get started up and running. The goal is obviously to get up and running as soon as possible with as little overhead or cash outlay as possible, with the most amount of efficiency in your process. And really, vendors in general help you get there. But as part of a startup and entrepreneur, you're going to have to manage a lot of vendors unless you go with a program like USA Staffing Services, our authorized dealer program. We have a partnership program. There's no cost to you. There's no startup cost. You get up and running within the next day. But if you are really starting, you really want to create your own program, I'm going to show you the vendors that I would recommend or just talk about regarding what you need to do to get started. So come on and join me. All right. So I have up here the blank canvas of Matt Klinsky. Today we're going to talk a little bit about those key vendors, and I'm going to start off by saying for me, the first one is your ATS and your CRM. Now, anytime you're going to branch off, you're going to leave that corporate job, you're going to have to find out how to manage your own candidates and manage your customers. For everybody who doesn't know, maybe you weren't super familiar, ATS is applicant tracking software. CRM is client resource management tool. And so typically a lot of the times they're combined. Sometimes they are isolated in just a CRM or just an ATS. So potentially you have two vendors there or one vendor depending on which one you go with. There are some cheap options, $49 a month type of options. But the keys to look at for CRM and ATS is really, how do they manage your customers in terms of workflows, customer workflows. And then from an ATS standpoint, can you post jobs? And you're going to need to get relationships with job boards and whatnot to post those jobs. So you want to then go to the job boards. And depending on your industry, really focuses on which job boards. As you probably experienced from the industries you've been in, every industry has their own job board. The basic ones, can range from a per placement to a monthly fee. ATS and CRM, like I mentioned, typically are going to make you sign a 2 or 3 year contract. So just kind of think about that when you're getting involved with those conversations. And you really want to know what can they link to, what can they sync to, what can they connect with. Those are going to be the distinguishing factors when you're thinking about an ATS or CRM. The next vendor you're going to need to think about right away is insurance. So insurance broker. And really, this is broken down into workers' comp insurance, general liability insurance, and then there's other supplemental like cybersecurity insurance that you're going to need to think about. When it comes to the cybersecurity and general liability, typically it's an annual premium that you're going to have to pay every year. They sometimes can split it up into monthly payments. But this is going to be kind of your standard business insurance. The workers' comp, on traditional policies, you're going to have to estimate your payroll for the year. So if you're a temporary staffing firm, you're going to have to estimate, predict out for 12 months what your workers' comp and then payroll will be. So at the workers' comp, you also have to know all of your codes ahead of time, which states you're going to be in, so they can get the policy created for you. And they're going to estimate per code. So for instance, if you're used to a clerical code 8810, you're going to have to say, I need $750,000 in 8810 code, and $200,000 in a light industrial code. And then the light industrial code is going to be divided into two types of light industrial codes. So you have to have all that ready for them. in order to get the policy written. It is possible to start with a very small policy, but typically you're isolated to one state and one code. And again, you prepay it ahead of time before you actually have temporary workers in the field. So this can cost anywhere from $5,000 to $50,000, depending on the volume of workers' comp or volume of payroll you need for your workers' comp coverage. General liability depends on the size of your payroll as well, but they really look at it as of today. So typically, for the startup phase, it's going to be $2,000 to $5,000 depending on the broker you go with, and so that's going to be a startup cost just to kind of get certified and logistically open the doors. The next vendor you're going to need is a funding vendor. So unless you're independently wealthy, which I don't, if you are, congratulations. Even if you are independently wealthy, you still probably want to have a funding vendor. So a funding vendor comes in lots of shapes and forms. And really this is to use for your payroll. So as everybody knows, temporary staffing is different than direct hire staffing. Temporary staffing, you have to pay the workers before you actually get paid by the customer. And so depending on the terms of the customer, on average 30 days, let's say, but sometimes 60 days, you're going to have to pay that payroll to the worker every week before you can collect the money from your customer. And so typically most businesses use a funding source for that. Funding sources come in lines of credit. So typically it's going to be if do you have a good relationship with a bank, you might be able to get a $100,000, $50,000 line of credit. But the challenge with that is that it's a limited amount of money. And so you're going to have to think about how long is the assignment, when is the customer going to pay, how many workers can I put out in the field at the same time. So if you have a $50,000 line of credit, you really only can have $50,000 of payroll out at any given time. And so this might sound like a lot. However, some customers plan on paying on 30 days, but don't end up paying until 45 days. And so do you have that reserve to run payroll a few more weeks while you're waiting for the payments to come through? That's something that you really have to think about. Factoring. You can factor your invoices, which means that after you invoice the customer, you take it to a factoring company and they buy your invoices on a one-by-one basis and on a weekly basis. So it is good to have some cash flow. They typically advance you 80% of the invoice value, and then they own the invoice. So they're going to start contacting your customer directly to get payment from your customer. When you sell the invoice, you have no more rights to that invoice, but the contract between you and the factoring typically allows that once the customer does pay, they'll pay you the difference between the interest used, which is typically 1.5% every 15 days or so. So it's a cost, costs a lot of money, but they can then buy bigger and bigger amounts of invoices. One of the challenges that I've seen in the past is that businesses who use factoring companies sometimes they might just not buy your invoice that week. And so it's up to them to determine which invoices they want to buy on a weekly, daily basis. And so if you're working with a customer and they're doing really well, but then the customer doesn't pay their bill on time, there's no flexibility. They're just going to say, no, I don't want to buy that invoice this week. Go find another source of funding. But you can't find another source of funding because they own a UCC on you and your business. So what that means is any payments coming into your business, they get first dibs on. And so no other banks typically want to sit behind a UCC. I could talk to you more about that on a different video. But lines of credit and factoring, and then there's asset-based lending, which is similar. It's a kind of a combination of the two. Lines of credit, you might have to put your house down as equity, or you have to sign a personal guarantee in any case. But the asset-based lending is different in that they can. It's a line of credit based on your invoices you have. So you do maintain ownership of those invoices. At the same time, you still have to put your personal guarantee, your house guarantee on it. You can't really get rid of that unless you join a program like our authorized dealer program, which when we put our houses on there, so you don't have to, so it's no big deal. But that's your options for funding. You want to get this ahead of time. Typically, they're not going to give you money up front. You're going to have to get the customer and then find the candidate and then put the candidate to work, hoping that you're going to get that funding for the payroll the following week. And so you want to make sure you know what you're dealing with so that you can make the best decisions for your business. Another vendor that you might want to have is accounts receivable insurance, which is different than your typical insurance. Accounts receivable insurance allows that if your customer doesn't pay your invoice, even though you paid the payroll for that time, then the accounts receivable insurance allows you to kind of make a claim against an invoice that wasn't paid. Now they have to approve the process up front, but it is nice to kind of have in the back of your mind just in case they don't pay, you don't have to come out of pocket. So anytime you're talking about staffing when it comes to funding, you have to realize whose money is at risk. Most of the time, and essentially all three of these times, you as the borrower are at risk. So that means that if you're going to pay the payroll for the worker for 6 weeks, you're going to have 6 weeks worth of invoices. If the customer decides not to pay that invoice, you're out of luck. You still have to pay back the money to the bank that lent it to you. They're not just going to say, oh, it's okay, we're friends. No, it could be $50,000, $60,000, $100,000 or more. We have some of our authorized dealers that have $450,000 outstanding invoices just in a 6-week period. So it does build up. And you don't want to be that person that says, oh, I can't work with you anymore. I can't add these new temps that you're asking for because I don't have the funding for it. So keep it in mind when you're thinking about it. Accounts receivable insurance, a lot of staffing firms will use because they can't come out of pocket to pay back the bank. So they get an insurance plan to pay back the bank, to pay back the factoring company, or the asset-based lending company. Other vendors you might want to think about would be like a payroll processing company. Payroll processing companies are important for a couple reasons. One, if you're going to be in multiple states, you're going to have to be registered in all the states. You're going to have to file taxes in all the states on behalf of your employees. You're liable as a business owner to file all those taxes correctly. So as a company, I recommend a payroll processing company to help with the logistics of filing those payroll taxes. Typically, they're not going to take any responsibility. So you're still the employer of record if you're owning your staffing firm. You're responsible by the IRS and by all the state governments to pay the appropriate taxes. But if there is assistance in that area, payroll processors can help with that in terms of collecting the hours, submitting the time through your payroll processing software. If you do it in-house, you're going to have to get a software to file your taxes anyway. So payroll processing companies kind of are all-inclusive. But again, they typically don't take on that employer record service. So you would still be responsible from a tax filing standpoint. And then other kind of vendors would be an invoice management service. Now, most people take this in-house. If you're with a factoring company, they'll do that. They'll harass your customers because they just want their money. So you kind of hand off that responsibility to them. On the lines of credit and asset-based lending, typically you're responsible for collecting your own invoices. So there are vendors out there that help you kind of represent you as the customer who's providing the staffing firm or staffing placements. But you want to see, who's managing your AR. Are you going to hire somebody in-house to do it? Typically, you can find somebody about $50,000 a year to manage your accounts receivable, but then you have to make sure you have enough profit to pay that person in-house. So all of these items can be done, or most of them can be done kind of on your own. However, if you are excited to start up your staffing firm now, our authorized dealer program takes all of these vendors and we create the partnership that you've been looking for. We're partners in the operation for your staffing firm. It's called the authorized dealer program for a reason. We aren't your vendor; we are your partner in the operation. So take your knowledge as the customers and your recruiting experience, and start your own business today. Join our authorized dealer program, and I look forward to working with you so you don't have to work on all these vendors. I'll talk to you later.